Opendoor has just wrapped up one of the most remarkable weeks in its history, and the story is far from over. On Friday, the stock surged 40% in a single day to close at $5.01 per share. That's the highest close in 3 years, and it wasn't just a one-off spike. In the aftermarket, the stock added another 19 cents, reinforcing the idea that buyers are still stepping in and that the momentum we're seeing isn't done yet. I believe this rally is set to continue into Monday's trading and beyond. Now, some will point to the possibility of profit-taking after such a big move. That's fair, and short-term pullbacks are always possible. But here's why I don't think it will last if it happens. Retail interest in Opendoor is incredibly strong right now. The energy around this stock has been building for weeks. Every dip we've seen has been bought quickly, and the chatter online has only intensified. This is no longer a stock trading quietly in the background. It's become a retail phenomenon, and that kind of energy has a way of sustaining itself. The timing of this rally also couldn't be better. Jerome Powell's comments at Jackson Hole were the macro spark that turned a fire into a blaze. By signaling that rate cuts are likely coming in September, the Federal Reserve gave housing-linked companies like Opendoor a major tailwind. Lower mortgage rates mean more buyers, more sellers, and more transactions, and for a platform built on activity, that's like oxygen. Combine that with a stock that was already gaining retail momentum, and you get the explosive move we saw on Friday. But while Powell's words provided the backdrop, the rally has been retail-led in its heart and soul. Eric Jackson, for example, has now spent 5 days outside Drake's mansion in Toronto, holding a sign urging the rapper to invest $100 million in Opendoor. On the surface, it's a stunt, and yes, it's funny. But it's also strategic. It keeps Opendoor in the headlines, gets people talking, and fuels a cultural buzz around the stock. It even got Jackson onto Fox Business, where he repeated the idea and made everyone laugh, but more importantly, gave Opendoor visibility on a mainstream stage. Jackson has also been more serious in recent interviews, particularly on The Rundown, where he laid out a very compelling vision for what Opendoor could become. He argued that unlike Zillow and other real estate platforms that essentially sell advertising to traditional agents, Opendoor starts with the seller. And without sellers, there is no real estate market. By putting the seller at the center, Opendoor has the potential to reshape the industry. It could become the Uber or Airbnb of residential real estate, a platform that redefines the dynamics of supply and demand. That's a powerful idea, and it's one that resonates with my own thinking about the company's long-term potential. This is where Opendoor's business model becomes more than just iBuying. By focusing on sellers and by building tools that streamline and enhance the process, Opendoor isn't just facilitating transactions, it's laying the foundation for a new kind of real estate marketplace. Think about what Airbnb did for travel. Think about how Uber redefined urban transportation. Both companies changed industries by focusing on supply-side participants, hosts and drivers, and by building platforms that unlocked new efficiencies. Opendoor has the chance to do something similar in housing. And the market hasn't fully woken up to that opportunity yet. At the same time, the company is reinforcing this vision with a pivot toward technology, especially artificial intelligence. Acting CEO Srisha Radhakrishna has declared AI to be a core primitive of Opendoor's future. He admitted that a year ago, he wasn't convinced AI was ready for real work with real money on the line. But now, after seeing tools like Repair Copilot, Risk AI, and the Key Agent app deployed in days or weeks, he's convinced AI can be transformative. These aren't just experiments. They're practical applications that cut costs, increase efficiency, and make the business more scalable. That matters because scalability is what makes disruptive platforms work. You can't build the Uber of housing or the Airbnb of real estate if your model is weighed down by inefficiencies and fixed costs. By using AI to become leaner and more agile, Opendoor is positioning itself as not just an iBuyer, but a platform leader. And that aligns perfectly with the seller-first strategy that Jackson highlighted. It's about creating a platform that connects supply to demand in a way that is more direct, more efficient, and ultimately more valuable. All of this is happening while retail investors are more engaged than ever. Anthony Pompliano has described this movement as a decentralized hedge fund, a hive mind of retail participants pooling their intelligence and conviction. He's even compiling shareholder suggestions to submit directly to the board. This isn't just retail buying stock, it's retail shaping strategy, providing feedback, and creating a sense of co-ownership in the company's direction. That's something new in the market, and Opendoor is becoming the test case for how it can work. We also can't overlook the possibility of institutional validation. There have been reports of discussions with Korean institutional investors about a potential stake in Opendoor. While nothing is confirmed yet, the fact that these conversations are happening adds another layer of legitimacy. If institutions begin to back Opendoor alongside retail, it could create a capital base that's both deep and dynamic. That's something we haven't really seen in the meme-era stocks, and if Opendoor can pull it off, it could make this movement even more durable. So where does that leave us heading into next week? In the short term, the breakout above $5 is a huge psychological victory. It's not just a number, it's a line in the sand. If Opendoor can hold that level, it could establish a new base of support, making $5 the new floor instead of the ceiling. Yes, we may see some profit-taking, but given the aftermarket action and the strength of retail conviction, I think dips will be bought quickly. The momentum is too strong, the narrative is too powerful, and the backdrop is too supportive for this rally to fizzle out now. In the medium term, there are multiple catalysts to watch. The high short interest creates the potential for a squeeze if the stock continues climbing. The continued engagement of retail investors ensures that Opendoor will stay in the headlines and in the cultural conversation. And the possibility of institutional money stepping in adds a layer of stability that could sustain the rally. Longer term, the real opportunity is in the business model itself. If Opendoor can fully embrace the seller-first focus and pair it with AI-driven scalability, it could become the dominant platform in residential real estate. Not just another marketplace selling ads, but a true disruptor that changes how people buy and sell homes. That's the vision that excites me, and that's the reason I see this rally as more than just a short-term move. It's a reflection of a deeper story that's still unfolding. As we head into the weekend, the message is clear: Opendoor is not just a stock that had a big day. It's a company that's capturing imagination, harnessing retail energy, and aligning with macro forces at exactly the right time. It's a movement that's part cultural, part technological, and part financial. And it's a story that I believe is only going to get bigger from here. Closing above $5 is a milestone worth celebrating, but in my view, it's just the beginning. The rally is not done, and Monday could be another step in what may become one of the most fascinating turnaround stories in the market.